Hey guys, AKIL'S here. Welcome back to the Trading Coach Podcast, another video edition. So tune in wherever you need to tune in to see this handsome face. Today, we're going to talk about the 10 greatest fears that newer traders have. And we're going to take out the two normal ones, right? Greed and fear, because that's common knowledge. So today's podcast comes from a tweet I saw by a good friend of mine, Stephen Burns, where he asked this question. He said, hey, new traders, what are the biggest emotional pulls that you have in the market? And after spending countless hours of research, meaning scrolling through so many replies on X, what I did was I put together my list of the top common ones. Some of them are kind of blended together just because they're pretty much the same, just worded differently. And I want to share them with you and hopefully share some solutions with you as well. So let's hop in. This is in no particular order, just in the order that I decided to list it in my Google Doc. So we'll start off with arrogance / risk taking, right? So one of the biggest fears, and maybe we shouldn't say fears, but or emotional issues, we should say kind of like mistakes. That's probably a better way of wording it. Hopefully I'm not going to go back and record the intro. You guys are listening. Who cares about that type of stuff? But arrogance is big. A lot of traders, including yours truly, came into the market thinking I would be amazing for no good reason. Now, in my particular case, I did have a really good experience in the stock market. I made a lot of money, so I was kind of overconfident because I got started at a young age and did really, really good right away. So I thought that it would be the same in trading. But the honest truth is that the way the world makes it seem, and by the world I mean socials, right? I'm not bashing socials. Socials are great, but they're negative in this way as well, is everyone is sharing their highlight reel. Everyone is trying to sell you something, and it doesn't really get clicks when you come in and say, hey, guess what, guys? This thing is hard and I lost today. It doesn't get clicks when you're selling a system and say, hey, this is a system that wins 50% of the time and you can make a 30% return on investment for the year. Now, you talk to a real trader, that is 100% fine, but this doesn't sell, which is why the way you don't see it, or this is the reason that you don't see it. This is also the reason that so many of you guys complain about, hey, Akil, you should be getting more clicks. You should be getting more views. And the reason I don't is because I don't do that BS, right? I try to keep it as real as possible and give you guys an outlet to look at or to see a realistic kind of view of what trading can actually be. It could be highly successful. It just isn't as glamorous and as stress-free as what you see out there. But a big mistake that a lot of traders make is being arrogant. And this comes from risk-taking as well. That was the second point that I wrote down. Risk-taking, meaning that they risk too much in hopes of making a lot, and that stems from their arrogance. So my advice for this is calm down. Understand this. When you are at the beginning of your trading stage or your trading journey, it is when you are most vulnerable to making mistakes. You don't want to risk more when you're the most vulnerable to making mistakes, because when you make those mistakes, it's going to cost you more. So take my advice. When you're new, be more risk adverse, trade smaller. As you earn that experience, as you get better at your craft, right? You train your skill, then you can afford to risk a little bit more because you're less likely to make the same amount of mistakes as you would when you first got started. Next up is going to be, oh, this is the tough word. I fear this word. I got scared. Perfectionism, not that one. I'm good with that one. Meticulousness. There we go. Meticulousness. This is the idea that I have to be perfect. And I'll tell you what, there is no such thing as perfect in the markets. The markets by nature are irrational. They don't care how good you are. They don't care what type of degree you have. They don't care how many hours you spent into the charts. They're going to do whatever the hell they want whenever they want to do it. And sometimes it just doesn't make sense. And you have to be okay with that. The problem we see with perfectionist people, a lot of P's in there, right? Is that they don't understand how to make adjustments, right? They're kind of, it's black and white and no gray. It's like, I did this, or the market did this, therefore it should do that. And when the market doesn't do it, they don't know how to adjust because they don't know how to kind of deal with that situation. This is the same type of situation as I did in Trading Coach podcast in the past, where we talked about people that are very, 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 very smart struggle in trading because they don't have the experience kind of correcting their mistakes. They're used to being right. And all of a sudden, when something is wrong, they don't know how to kind of dig in and analyze and figure out what went wrong. So you have to understand that, there's no such thing as a perfect market. You could be perfect in the execution of your trading plan. That is the goal that you want to do. And understanding that your trading plan is set up to give you an edge, and edge is set up to create profit for you. So if you are perfect in following the process, you'll be perfect in acquiring the profit. It doesn't mean you're going to win all the time, but you're going to win the amount of time that you're supposed to win. Just the second part of this real quick, analysis paralysis. Something that happens too with people that are perfect or want to overdo things is they see everything from every different angle. Meaning they see this, but then they see that, and then they see this, they see that, and they see so much that they actually freeze and do nothing. We call this analysis paralysis by overanalysis, where you overanalyze the market so much that you kind of step on your own feet. And this was me a lot in my trading career. Again, a solution to this: have a plan, strictly follow the plan. If you're going to do other type of analysis, make it separate from your actual trading and just make it like a hobby or something like that. I'm sure we'll touch on that subject later. Next one up, FOMO, fear of missing out. This has to do, probably should have combined this with over trading. Let's see, do I have it on there? Yeah, so let's combine this one. FOMO, we're going to add FOMO with impulsivity. Gosh, these guys are horrible with the words. They knew I was doing this podcast. They knew I can't speak. FOMO, fear of missing out, impulsivity, patience, instant gratification. So the fear of missing out is the fear of missing a move, right? I talked about trading plans in the last segment. And when we have a trading plan, it's a strict rule of what we should be following. If this, then that. If this, then that. And a good example of a trading plan for how to enter a trade, for example, is this. If price action comes down to a previous level of structure support, then I look for 3-bar reversal. If I get 3-bar reversal, then I enter next bar market. With next bar market meaning that as soon as whatever candle closes the way I need it to close, then I enter the trade at market and at market order for the next trade. But the hard part of that is you're waiting for that candle to close. You know that you're not supposed to enter until it closes, but that candle is going in your direction, right? Which it needs to be to give you a positive look that the trade is in your favor, but it's going in your direction, and all those evil thoughts start going into your head like, man, the move is going to be made without me. And you look to the left, you look to the right, you look up, you look down, no one's there to stop you, and you push the button. You're fearing that you're going to miss out on the trade, so you get in too early, and that causes all types of problems. I won't run you through the whole rundown of what that can cause, but it is a trading mistake. Impulsivity is kind of the same. Patience is the same. Not having patience to wait for your signal. Being impulsive, meaning that maybe it's the dog days of summer and the markets aren't moving because they're waiting for a news event at the end of the week, and all of a sudden you're so bored and you feel like I have to be trading because I can't call myself a trader if I'm not trading, so you just take random stuff out of boredom, right? These are all trading mistakes. These are very, very, very hard to deal with, but it's something that a lot of newer traders struggle with. Adding to that is instant gratification. Once they do enter that trade or that move, they feel like the market has to go their way right away. It has to go straight up to profits. And if it doesn't do it within like the next candle, then they're wrong. And then they get another fear and they start exiting the trade because it's not going to go in their direction or something like that. So all of these line up together. The next grouping is going to be boredom, right? Boredom of repetition. We talked about the dog days of summer where the markets aren't doing much and how this leads to over trading or impulse trading. Boredom is tough, right? The reality is that, and this is why many traders flock to the lower time frames, is there's not as much action as you think in the market. We all go into the market thinking it's like, an ESPN highlight reel, right? We watch NFL highlights on ESPN and we see all the plays and we're like, man, this was an exciting game. But the honest truth is they played it for 60 minutes and there was like 5 exciting plays. The rest of the plays were boring, right? But we don't have it in us to kind of sit through that boring game to make it to the highlights. We want everything right now, just the highlights. And in trading, we need to be able to sit through those boring times in order to wait for our trade, not taking impulsive trades, not fearing that something's going to be missed, waiting for our trades. What you can do is that hey, while you're not getting trades, do something else, right? If you're going about your trading the right way, there's always something to do. There's back testing, there's strategy development, there's a new lesson you could be learning, there's something else you could be exploring in the market. I call it playing in the playground, where I open up random charts and I just experiment, look around, take notes. This is how I deal with boredom. Instead of looking at a chart that has absolutely nothing for me and tempting myself to make mistakes, I do something that's more productive and something that can help me in the future. And I would advise that you guys do the same thing. Next up is going to be anxiety and stress. These are hard, right? This happens pre-trade. This happens during trade. This happens post-trade. This just happens the entire time while you're trading. You're going to be anxious. You're going to be stressed out. And one of the greatest bits of advice that I got from Dr. Brett Steenbarger is that there's a difference between stress and distress. We need to accept as traders that we're going to be stressed, right? Believe it or not, Akil had nice hair. Look at the YouTube videos from a long time ago. Man, it was good. It was flowing. And then I started trading, and then it became this, right? Because it's a stressful environment. But stress is okay. There is stress. Stress isn't necessarily a negative. Stress is something that causes growth. I won't go kind of too far down that rabbit hole, but it is true. You can't grow without being stressed. Stress doesn't cause mistakes. It's when stress turns into distress that mistakes. So when stress turns into panic, that's when mistakes happen. So it's okay to be in a trade and be a little anxious, be a little stressed out because you don't know the outcome. It's different to be in front of a trade and have it turn into distress, and now you're panicking because it didn't give you profits right away, and now you have to make up for that loss. Now you got to get 2 more wins because you have this quota, right? Those are distress. So stress is just a state. Distress is like a state that leads to actions. We want to avoid those negative actions, but it's okay to be stressed. It's okay to be anxious. What I do is I get away from the charts, right? So I told you guys I'm a big sports guy. I try to work out, stay in shape, so I can wear tight hooded sweatshirts like this. Oh yeah, there we go. So something I do during my trading day at a very specific time is I get away and I do a workout. I go for a run, I go for a bike ride, I hit the boxing ring, I go to the weight room, something. And that is my stress reliever, right? Some people could be yoga, it could be reading a book, find what it is for you, listening to music, but have some type of stress reliever to kind of take you out of that stressful state, decompress, and then head back into the markets, and that's going to stop it from turning into distress. Next, confidence, right? We talked kind of about overconfidence earlier, underconfidence. This is tough. It's hard to believe you're good at something until you've been good at something, but you can't be good at something until you are good at something, right? Chicken and egg type of stuff. So what we have to do is we have to manufacture confidence. And the way we manufacture confidence is by doing the right steps, right? Something that we do with our traders on the Tier 1 trading platform is they understand that Jason and myself are successful traders. They understand that there are, I don't know how many now, really good traders and successful traders and hedge fund managers and prop firm traders on our platform. And we encourage that they share their stories and the process that they went through. And pretty much we're relying on mimicking those who came before us. If I know, for when I was getting taught how to trade, I knew that my trading mentor did 1, 2, 3, 4, 5, 6, 7 steps, A, B, C, D, E, F, G. And that's what allowed him to be successful. So what gave me confidence is knowing that, hey, if I work through the same plan, if I climb the same ladder that he did, then I can be on that same path to success. So before you have confidence and start trading, you have to manufacture it. Understand that, hey, I am doing everything the right way to put myself in a position to be successful. I've done my back testing. I've done my education. I've developed my trading plan. I've demo traded. I've paper traded. I've done everything possible. Now I just have to kind of jump into the water and do it. And it's tough at first, but once you get kind of through that first period, I would say once you get past your first year of going through making mistakes, your first hot streak, and then your losing streak, and then another hot streak, and you get out of that drawdown, then you start gaining confidence that I can do this, that you deserve this success, you deserve this profit. It starts becoming easier and easier and easier to the point where you're, decades into trading, and in the most kind of humble way possible, you're going to be successful long run each and every year. Being wrong, losing money, this is a hard one as well. we don't want to be wrong. This goes back to perfectionism, right? It's hard being wrong. It's also hard being wrong when you know that being wrong loses money. So it kind of hits the ego and hits the pockets at the same time. It's tough. But we have to remember that you're going to be wrong a lot in trading. Even the best traders of all time, many of the best traders of all time win at like a 40% clip. That means that they're wrong 60% of the time, right? Even some of your highest percentage winning traders are probably in the high 60s, maybe 70%. They're still wrong 30%, 35% of the time. You're going to be wrong enough. It's not about individual wins or losses, right? One of my earliest podcasts was called Who Gives a Boop? What your win percentage is, because it ultimately doesn't matter, right? Win percentage in its own right is only so powerful. It's win percentage combined with your average risk reward that makes the difference. So know your numbers, know what your percentages are supposed to be. Understand that the process is more important than the outcome. Yes, you're going to lose trades, just as a chain restaurant makes mistakes and loses employees or loses product when people spill it on the ground, right? That's the cost of doing business. But bigger picture, if you're doing the right thing, what you make will outweigh what you lose, even if your win percentage is inverse. Lastly, euphoria and hope. This is a tough one. I probably could have combined this with overconfidence as well, but people think losing streaks are hard. I just told you, like, losing money is difficult, losing trades is difficult. Winning streaks are hard too. When we have these winning streaks, and especially when winning streaks come with making money, it is a high like no other. And just like other highs, right? Your next high is never as good as your first high, meaning that when you get your first win, it feels great. You made 100 pips or whatever it may be. But now, everything under 100 pips kind of feels not as good. And for professional traders, we understand that each trade, we look at it as an individual. We're happy if we get what we're supposed to get out of the trade. But a lot of newer traders have this trouble of like, they want to feel happy. They associate a win with a feeling. And when that feeling doesn't come the same way, then wins even feel like losses, and they have to try to do more and more and more. I remember this study from when I was on my Gary V kick, right? I remember he was talking about a young lady who was posting all of these like awesome, really, really good posts, but wasn't getting a lot of likes. And then one day she did like a similar post, but she had like the zipper unbuttoned a little bit. Ooh, easy there, right? And she got like 1 million more likes. And obviously she is associated with like, hey, I got more likes when I showed a little bit more skin. So that made her feel good. So what do you think she started doing in the rest of her videos and her content, right? She started showing more and more skin. But the problem was in her next post, she did the same thing, but didn't get as many likes. So she's like, I got to show more. And then didn't get as many likes. And then I got to show more. And then she got more likes. And then she in chasing these likes, by the end of the year, whatever it was, she was pretty much like posting like naked pictures because it kept taking more and more and more to get more likes. And she didn't feel happy, where 100 likes a year ago would have been amazing. 100 likes now was nothing. And she wasn't fulfilled unless she got more than that. And it just was this downward spiral. So trading is the same way. We get so excited. We feel so good after this win. We have to compartmentalize. There we go. I'm a lot of big words in today's podcast. I'm not built for this, but I've been pretty good at nailing them. I haven't butchered it yet, unless I edited them out. Right? No, seriously. I've been good today. I'm probably gonna mess up on an easy word now, but we have to compartmentalize them, right? And another trick that I use is this, right? So the same thing where I said I kind of de-stress from my situation. I go out, I hit the gym or do whatever like that. A tactic that I use in order to kind of forget about the high of a trade is I would have a victory song. I had a victory song, I had a victory dance. One, if it was a good trade, two, if it was a great trade. And I'd play these songs, I'd dance around, I'd get excited, I'd hype myself up, I'd scream, I'd shout, I'd do all the crazy stuff that we did in sports. But once those songs were over, so once that like 5 minute, 8 minute period was over, I had to get back to business. I had to have a short memory. I had to forget about it. This was something I used in sports, where if I made a mistake in sports, my coach told me I had 5 minutes to be pissed at myself, and then I had to move on. So you got to do that too with losses. It's helpful, but with wins as well. Congratulate yourself. right? Celebrate every win, right? Celebrate every win. You did something good. That is a positive. Celebrate every good trade for that fact. But then move on. The next trade has nothing to do with the previous trade. Just because that last one got 100 pips, this one you don't have to shoot for 101. You take what the market is willing to give you, and that is a win in its own right. And when you can kind of put things into that box, it makes it a lot easier to deal with, and you're not chasing that high all the time. So those are some mistakes, emotions, struggles, I don't even know, but those are some things that new traders struggle with. If there's anything that I missed that you struggle with, let me know. Type it in the comment section below or hit me on the socials. I'd love to hear about it. And until next time, plan your trade, trade your plan. Guess I'm supposed to do an outro here. I don't really know what to say, so I'm just gonna dance a little bit when the music's on. And then I'll cut it out and I can promo whatever I want to promo. If you're not watching, this is weird. If you are watching, I'm dancing. It's awkward. So I'll see you guys next episode. Take care.